And once again, we are here on Living in the 21st Century. Joining me today is Hughes Marcelin, tax accountant. He is from Boston Tax Masters. Hughes, welcome to the show.
Thank you.
And my first question goes out to you. How long have you been an accountant?
Well, I've been an accountant since I was, I've been doing taxes, I should say, since I was 19 and 17, 19, I believe 17. And I've been doing it on the side while I was in school. My father was a tax accountant himself. And then recently I graduated from Suffolk with a MST degree.
Okay.
And I own a business where I do taxes. And I'm excited to be here to answer a bunch of questions and why it's important, why taxation is so important.
Well, very good, very good. So what's the difference between a tax accountant and a tax prepper?
Well, there's not, I would say an accountant, when you want to put that accountant, that means that you can look at the financial statement of somebody, have a broad understanding. A tax preparer, a lot of them pretty much, they may be able to do a Schedule C, but doesn't understand, they don't have a level of financial statements, putting a balance sheet together. They'll just do a sole proprietorship tax return, not going in depth in the corporate tax return. Because it does, you do need a level of understanding of financial reporting in order to do those type of tax return. That's why sometimes they put the accountant, meaning that they can do a balance sheet and income statement and statement of cash flow, something like that.
Pretty good.
Yeah.
Yeah, nice. So why continuously asking questions to your accountant? Like, what's the best gift can you give yourself?
The best gift anyone can give themselves is befriend, I would say have an accountant where you are comfortable to ask them questions. Like his number you have his number on speed dial, or her on speed dial. The reason is simple, because everything you do affects your life. And tax wise, you're gonna have a baby, that affects your tax return. You're buying a house, that affects your tax return. You're selling a house, that affects your tax return. You're getting a divorce, that affects your tax return. In response to that, people, I'm going to bring a topic in regard to divorce right now. So there isn't a law that prior to Trump tax plan. So let's assume you're getting a divorce, right? So I'm paying alimony. So the donor to the alimony, to the donee, I will get a write-off in my tax return, right? And that person receiving their alimony will have to pay taxes on it. So Donald Trump came in and basically said, listen, that needs to stop. So guess what? The donor of the alimony, the person who's paying the alimony, guess what happened? Can't take that write-off, and the person who's receiving that alimony doesn't have to file it, doesn't have to include that in the tax return. That kicks in on 2019. Okay. Now, here's the interesting aspect of this. People, you're gonna love this part. Now, people are trying to get the person receiving alimony try to file the divorce They want a divorce in 2019, and the person who's paying alimony wants it right now. So now there is a battle that goes in between the lawyers. One lawyer is trying to prolong the divorce, the other lawyer wants it right away. So if you're going to get a divorce, you may want to do it this year. Don't wait for 2019 if you're going to pay alimony. But if you are going to receive an alimony, wait for 2019.
That's correct. That's funny.
Yeah.
What are some of the pros and cons of filing your own taxes? Because, you know, there are some people that like to do it and so forth themselves. Well, yeah, what is the pros and cons?
There are some tax returns that are fairly simple. It's a 1040 easy tax return, or you don't have much, you're itemizing. Itemization is going to be, less Americans going to itemize starting 2018, for 2018 tax return. So if you didn't sell a house, you don't have a business or a sole proprietorship, even you don't drive Uber or anything like that, nothing fancy. I would say you can just invest and buy something online and do your own tax return. You just plug in the numbers. However, if you are selling a house, for example, you just sold a house, and then it's a rental property, I wouldn't go try and do my own tax return because there's a lot of readings. I've seen people doing readings for like weeks to do their own tax return. And I'm like, is it really that expensive to pay an accountant to file your tax return?
Yes.
Because with all those readings you could have
Yes.
been doing, you could have been investing
Get someone that specializes in it. Finish.
Yeah.
Yeah. You know, one thing this year we would have heard that Trump would have announced tariffs on some countries on the export products and so forth into America. Now, I don't have to assume this will have an impact on taxpayers in America one way or the next. Could you explain a little bit more about that?
Well, I find it really, seriously astonishing that the Republican Party is actually a party of no tariffs. All of a sudden, they're not saying anything about Trump tariffs. The Trump tariffs, this is the same guy who just cuts a lot of people's taxes, including my taxes and your taxes.
Yes.
You know, just reduce a bunch of people's taxes. Except for people who lives in New York. Some of them are not too happy right now regarding the certain things he just did, removing your taxation with state and local taxes and stuff like that. But in general, most people get a tax cut.
Yes.
But he turns around and increase people's taxes, especially the very people that voted for him in middle America with agriculture. Because a slapping tariffs on a product, it's an increase in taxes. It's just that simple.
Exactly.
Because China and turn around, China, Mexico, and the European countries are not going to sit down and agree for you to increase tariffs on them and not going to do it to you. And in cars, in certain products, American have slapped tariffs on other country about 25%. So they don't talk about that. So the tariffs game is a very dangerous game because it's an increase in taxes, and the world economy is interconnected.
Right.
And there is no such thing as an American economy. There is the world economy.
Exactly.
Everyone is connected. If we sneeze, everyone feels it. Get a cold. If China sneeze, we feel it too. So it's not going to turn out right. We already seen
that's true, because there are those already who would have seen price hikes in some of the commodities that they would normally buy, and this obviously is a result of other countries saying, well, hey, if you're going to place a tariff on us, well then we're going to have to do the same thing to you.
Yeah.
And that in itself has an impact on the consumer's pocket right here in America. And I don't think it was a good choice or the right path that Trump should have taken. But he's...
Well, let's take an example of how cars are built. You look at a car that's built between America and Mexico, right? Some part of the car is built in Mexico. Some part of the car is built in America. So you turn around and you say, I'm going to slap tariffs on Mexico. That part of the car that's built on Mexico. You just increase the price of the car by 25% if you increase tariffs on Mexico by 25%. The German cars you are saying that you are going to slap tariffs on, it's a lot of those cars are built in America.
Right.
Okay, so you are affecting the very people that works in America.
Exactly.
See, that's the thing. People talking about, okay, we are going to raise their tariffs because we're trying to fight for America. Well, yeah, but there's only one problem. We all are connected. Every product that is built, somehow, some way, is now connected in America, in all of us. So, yes, the Chinese have manipulated the tariffs game. Yeah, they have. They have manipulated a lot of the economy. And it's somewhat hurting America. Yes. However, there are ways of approaching this without this war in tariffs, a war game that we're playing right now.
Yes. Well, you make a valid point there, though. Even though, and China had been engaged in our free trade for a long time.
Yeah.
And I think there was a case where we had a company here called Solyndra, I think that was the name. I'm speaking subject to correction, who manufactured these solar panels. And China decided they're going to flood the world market with solar panels and sell them for like next thing to nothing. And the company here can even compete. So they actually dump their commodities, their goods on the world market. And they had me engaged in a lot of unfair practices for quite a bit. And I think it was under that consideration that Trump decided, well, look, you're doing some unfair trading here, we're going to lash back one way or the other. You're going to pay that price. But I don't think he just looked at China, he decided that he was going after everybody. And that is what had this big, huge impact on our economy and the taxpayers going and finding these price hikes, whether it's in the supermarket or in some other commercial place for whatever they may be going after. So, besides that, why is it always necessary to talk about a tax accountant before starting a business venture? Because people goes into business ventures sometimes blind, and sometimes they don't even do their market research properly. And sometimes they get confused with their feasibility studies and their market research. They all ramble everything up together as one, and they make a mess of themselves, and before you know it, their business and their finances just collapse. So why is it important that people should really consult seriously with their accountant before going into business venture?
Let me try to simplify and give you the end product.
Yes.
Before I start.
Right.
With the beginning product. When you can do someone tax return, right? The person make $150,000
Yes.
in 1 year, and then go out and splurge and do all kind of stuff, and then at the end of the year you give them that bill and they don't have the money to pay.
Right.
So talk about that for a second.
Yes.
Right? People have done pretty well in the business, and then at the end they just don't have the money to pay. Reason because they didn't even talk to an accountant to tell them this is how much money if you make, this is how much money you will owe the IRS.
Exactly.
And you see it a lot with basketball players and football players. They basically never thought about taxation. People have a tendency to hate taxes, period.
Yes. That's right.
If you think I'm playing, go on a date and mention taxes. The girl goes like, oh, I don't want to talk to you ever again.
Okay.
So taxes is by nature not a very attractive subject. It's almost saying, it's not attractive to go around and say, I do taxes. So people avoid it at all costs because they want to make that money. They'll have the marketing, the guy, they have the person who does the sales, but taxes is usually the back end of all conversation. But those who understand that taxes are important, that they have to pay, they have to deal with the IRS, by nature is going to do pretty well. So why it's very important to consult a tax accountant? Because a tax accountant will allow you, just like with an attorney, that will protect you and say, listen, this is how you structure a business, just in case you get sued, just in case your partner trying to take you to the cleaner or anyone trying to sue you, this is how you protect yourself. And the accountant will do the same thing in regards to help you understand this is the way you should build your business. This is how you save receipt. This is how you organize your business so that you can know how much you're going to pay the IRS and how much you can reduce your tax bill. But a lot of people don't even have this conversation. At the end of the year, you give them the bill, they're like, you sure that's how much I owe the IRS? Yes, it is.
Yes, okay. For the average person out there, some of them may not even know the difference between an open transaction and a closed transaction. Could you differentiate both of those?
Okay, open transaction means that it's a transaction in taxes that hasn't been taking place yet. But if you do XYZ, this is how much. This is what you can do. For example, 1031 exchange is a very it's a good example of an open transaction. It's basically saying that if you own a rental property and then you can you buy a property of equal value, you can defer the taxes in the future.
Yes,
that's an open transaction. However, a closed transaction is simply mean that you already sold the rental property. You can't do a 1031 exchange after the fact.
Correct.
So once again, that's why it's very important to talk to your tax accountant, because you want to be able to always be on the side of an open transaction, not a closed transaction. You don't know how many times people sell a house and trying to tell me about, hey, I sold my house. Can I do a 1031 exchange? No, you can't. It's already sold. Sorry. Yes. You sold your investment property already. You can't do a 1031 exchange after you sold. It's before you sold. You have, there are things you have to set in motion in order to defer the tax. And it has to be in motion at the set time and that the tax, that the IRS requires it. So that's what an open transaction is.
Okay, nice. So what are some of the things a person can do to avoid an IRS audit? I mean, no one want to really go there, but what's some things you can, safety precautions you can do to avoid?
That's actually, I like that question a lot because the nature of audits, a lot of times it happens because, number one reason, you forgot a W-2 or 1099. So I would say the end of the year, make sure whatever you jot down everything you've done throughout the year. For example, if you remember that how many jobs you have had, if you had 401k, remember IRA, if you did any distribution, you sold any stocks. A lot of times, you know, people, those audits happen because it's simple mistakes where people forgot that sold X, Y, and Z stocks, and next thing you know, here comes an audit.
Yes.
IRS will catch those audits very simple because they got very easily because they got the paperwork. They're like, well, you didn't put the fact that you sold the stock, but we got it. You sold it. We'll put it in your tax return for you.
Yes.
But the only problem with that though, they'll make sure they put it with no basis. So you know, you sold it. In another word is you bought the stock for $100,000 or $50,000. But you made you sold the stock for $80,000, but you bought it for $50,000.
Right.
The IRS will put zero that you bought the stocks and sold it for $80,000. So that's that's why it's very good to avoid an audit.
Right.
The IRS is not gonna. The IRS is gonna assume you have zero basis.
Yeah.
However, the other audits happen because a lot of time it's random. Some audits are random audit, and some audit because you excessive write-offs.
Yes.
Somebody will come in, for example, they'll on a sole proprietorship tax return, they'll put like, oh, I had $20,000 of expense,
right, and
they only made $25,000.
Yes.
Somewhere on the line item, and IRS was like, okay, we got to question that $20,000 that you put in there, and next thing you know, here comes a IRS audit.
Right.
So, when you doing your tax return, working with a tax accountant, those are the very good questions that you will ask if you do, especially if you're a business person and you have you're a business person. You want to ask, or you're itemizing.
Right.
You want to ask, is this expense I'm taking, is it a little excessive? What's the possibility of an audit for this one? Or go back and look at all the paperwork that you have and make sure that you're putting everything in there, all the W-2s, all the 1099s that's in place. That's the best way you can minimize it. But sometimes you're going to forget. So just make sure you try as much as possible that you don't forget.
Yeah, and you know, there are some people who had been getting away for years before filing taxes. Tell me, how is that really possible?
Well, if you have the W-2 or the 1099, you haven't filed your tax returns, the IRS system, they go by, it might take them a couple of years to catch it, but they will catch it because they got those paperwork.
Exactly.
So what they will do for you, in a lot of cases, they'll do a substitute tax return. They will send you a bill. Yeah. The problem with that too, you never filed the tax.
Right.
And it's the worst thing ever. File your tax no matter what's going to happen.
Yes.
No matter, even if you're going to owe the IRS, I always tell people, file the tax. Don't let the IRS file the tax for you. So these people who think that, oh, I never got a letter, even if it's 2-3 years later. Oh no, the IRS got the paperwork. They're going to file it. They're going to, in a lot of cases, they'll say just send you a bill. Other cases there is no traceability of income. In other words, there was no 1099, no W-2. The person was getting cash. So the IRS doesn't know.
Exactly. Right. So
Yeah,
there
but
are
those also, if they catch you, that's problematic too. All of
Yes.
these cases are problematic.
Right.
In cases even when the IRS filing it for you, doesn't mean you're getting away scot-free because
Exactly.
there is a law in place. You're supposed to file your tax return.
naturally.
Yeah, that's against the law not to file your tax return. So I always tell my clients, to anyone that I encounter, no matter how you think you're going to owe the IRS, you don't have the money, please file the tax return. At least you are respecting the law,
Yes.
the rule of the law. But if you're not, you already breaking the law right there. But a lot of people thinking, oh, it's 2 years they haven't catch me. Oh, I'm getting away scot-free. But when they get the bill and the penalties, they're like, oh my God, I can't believe this happened. Yeah, but
Correct.
yeah, but like I said, sometimes there is no traceability of income. The IRS failed to catch it, and the person might get away. You know, but if they catch that person too, that's
So this next question though that I got for you is, do a person who works in a higher income bracket stand a more easier chance at getting an audit from the IRS, or opposed to a person who just work for normal weekly wage or small monthly salary? Does that person in a higher income bracket, is it a more obvious chance that they may get audited?
statistically speaking, yes. Not because they make too much money, because there are ways you can make a lot of money
Right.
and never get audited. One of it, for example, let's just say I work for you, you pay me $5 million, but you said W-2 $5 million, and I put exactly $5 million in federal taxes, whatever I paid in,
Right.
and that's it. I would never get audited because the IRS got the W-2 looking at it,
Yes.
says, okay, $5 million and the federal taxes are matching, everything is good.
Correct.
That's it. Now let's assume that you make million, you have a business and you make $600,000, $700,000, $800,000, and it's a 1099, and then you have a lot of expenses.
Correct.
And you sold a house. You did some flips. You know.
Right.
Flips meaning that you bought some
Right.
investment property, you sold it,
Exactly.
and then you put that in your tax return. Now you have so much actions going on in there
Yes.
in the tax return. That's what's created the audit.
Yes.
It's not just the income; it's the nature of the tax. So, and then you have a bunch of write-offs. Or you were living abroad, for example, and you were living in London, and then you got paid there, and then you basically took you basically have a corporation, and then you sold that company, and there's a lot of actions
Yes,
going in
and
that
that
tax.
create that obviousness.
Yeah.
Well, I know we're getting low on time, but there's a few questions that I really want to ask before we get away from it. Should married couples always file? Should they file together, or should you think it's better to file separately, or should it be determined by the amount of income collectively that both earn together? What do you think is the best route to take?
Very good question. The worst tax status you can file is marriage filing separately.
Okay.
I'm telling you this right now.
Okay.
I've seen people, oh yeah, I'm married filing separately. Oh God. Most likely it won't work for you. You're going to pay a lot more in taxes.
Yes.
The reason is simple, because of phase out, meaning that the IRS, so you have phase out when you're single, you have phase out when you're married filing jointly. What the IRS assume, you are breaking off the taxes so you can
Right.
beat the phase out.
Yes.
So what they do, they assume, well, you're doing that anyway, so you reach your phase out, so you're not qualified. One of them is an income credit, okay? So phase out right there. You have American Opportunity Credit for educational. That's phase out right there. Automatically, you phase out, and your tax bracket goes up slightly when you are in married filing separately. So I would say 99% cases, your married filing separately will pay more taxes. The only way married filing separately where it could be in your favor, that's in the case of when you have medical expenses
Right.
and unreimbursed business expenses because they abide by rule that says unreimbursed business expenses is 2% against AGI. I'm not going to go too technical.
Yes.
So if you're talking to your accountant and you have medical expenses between a couple have medical expenses, they could say, okay, I have X and Y, I have medical expenses, and the tax accountant will say, okay, based on these calculations I've done, I think splitting the tax is better.
Yes.
But if you don't have medical expenses and unreimbursed business expenses, by nature, stay away from filing separately.
Okay. Going on through this information, what is the most popular scam out there, and what can taxpayers do to avoid being scammed?
Yes. One of them is always hide your social. Don't give it out leave your social out there to everyone. That's the one that's the hardest. I think the reason is simple because we call in everywhere and then giving out social to people,
Yes.
and then we don't know who they are. And what people don't know is someone can take your social, they'll have your name, your first name, last name, they'll have your social. They can file a tax return on your behalf
Right.
and get a refund. And then you'll have to explain to the
Right.
IRS that wasn't you.
Exactly.
You know how that is?
and-
And they have to reissue another refund. And the IRS loses hundreds and hundreds of millions of dollars on that scam alone. That's a problem for the IRS.
Right.
Okay. And the worst part about that, when people file a fictitious tax return that basically they stole somebody's social, they basically they'll put it on those cards where they can't even trace them, and a lot of times they go scotch-free. So the IRS is reissuing another refund, and getting your refund alone after that takes like 6-7 months.
Yes.
Because you got to explain who you are, you got to prove who you are. There are paperwork you got to
Right.
provide to the IRS. So you want to avoid that. You want to safeguard your Social Security.
Okay.
That's number one. Second, if somebody ever called you and say, hey, excuse me, sir, I'm the IRS and you owe X amount of money. First of all, the IRS does not call anyone.
Okay.
Okay.
Nice.
They'll write you a nice little letter.
Right.
Okay. As soon as you hear the IRS, please hang up. And I know the IRS, they would
Correct.
love you not to hang up, but unfortunately, I will tell you this right now, they don't call. They only call if they send letters and then they're reaching
Right.
out to you, and then you're under audit and you call the IRS and then you tell the agents to call you back, they're going to call you. But the IRS writes several letters even before you even engage, and you will have to be in a situation where you reach out first before this can happen. So if you ever heard somebody from any government agency say, I called you, I'm calling you, therefore please provide, you owe X amount of money, please hang up.
Okay.
It's another thing they do now, I noticed, it's a second scam. They don't ask for money, they'll ask you for you to verify your social.
Right.
IRS have your social, so they will never ask you to verify your social when they call.
That's really good. Okay.
IRS will not call you to ask you to verify your own social.
That's true. Well, on that note, Hugh, thank you very much for coming here and explaining a lot about taxes and protecting yourself with your social security number and so forth. And for all those who have been tuning in, I want to say thank you very much once again for tuning in on Living in the 21st Century. Bye-bye.
Thank you.
Welcome to Understood.org, a free online resource for parents of kids with learning and attention issues, with personalized recommendations, tools, and expert advice.
It takes less than 1 minute to find out if you may have prediabetes, and you can do it here. So what are you waiting for? Just go to the site.